Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I'm Manisha Gupta. As the second week of 2019 comes to a close, there are more gainers than losses in the commodity space. The best performance among the commodity is registered from the energy sector, where the crude oil prices, apart from being volatile, hit a 5-week highs and have surged 10% for the US crude and is up 8.5% for Brent crude prices also. The prices have put the best winning streak since February 2012 as cautious US Fed and US-China trade talks boosted the market sentiment. The precious metals in the meanwhile also have derived strength from the soft US dollar, the continued US government shutdown and volatile equity markets. The gold prices are holding the 6-month highs and the 2019 forecast for gold and silver has continued to be quite bullish. The industrial metals also have some winners like copper and nickel closing the week on a firmer note. The losses, though, were seen in steel, aluminum and zinc for this week. The agriculture space continues to see pressure as most of the kharif crops trade below the minimum support prices set by the government. The rabi sowing is down by 3.5% as well as compared to the previous year on concerns of soil moisture and drought situation in nearly 6 states. The weak global prices in agri also continue to weigh on the domestic prices. But let's get in our experts to lay out on what to watch out for in 2019 and get some hedging and investment strategies as well from them. Joining us on the show is Kunal Shah. He's head of commodities and currency research at Nirmal Bang Commodities. We also have with us Preetham Patnaik, who's head of commodities at Reliance. Also joining us on the show is Kishore Narne from Motilal Oswal. Gentlemen, hi. Thank you so much for watching us. Kunal, let's begin with you first. And what a start to a year it has been, especially for the energy space. What is your sense with the kind of gains that we've seen in 2 weeks now? Is it going to be a task to hold these levels, or do you see further upward momentum?
Whatever forecast we've seen in oil during the last quarter and this start of the year, all forecasts have gone for a toss. The main reason, I have not seen in my 11 years of career this kind of volatility in oil, where you've seen 60 to 85, 85 to 50, from 50 to again 60. This is unbelievable. The volatility is at its peak. The reason for that, I think 2-3 main reasons. One, US oil production growth is slowing down. That is one of the main reasons, and that has not been highlighted quite often. So we've seen in last 2 years almost 1.5–2 million barrels of production growth coming from US. Now that is likely to slow down. But again, I mean, this is a swing producing market. US shale oil market is most of the oil producers are swing producers. The moment price moves up, it becomes viable for them to again pump in very quickly, not like a conventional oil. So my take is I'm not very bullish on oil. Whatever upside we've seen, I think from here maximum $2–3 on MCX 3700 perhaps, or 3750 max. I would recommend to go short, because you have to remember, even if Saudi Arabia is cutting production, OPEC production is going to be cut going forward. But the fact remains is that the global inventory is building up. The electronic car revolution is picking up very fast. And at the same time, the moment prices move up, the production is again going to come back, especially from US. So I'm not very optimistic about the outlook of on oil. I think $70 is going to be as good as $100, and it's not going to test $70 and not going to sustain at it. So sell on rallies is my view on oil, and I'm expecting oil to again retrace back to the levels of 3,400 to 3,450.
Kunal, you of course are talking near term, but if you had to give a full 2019 outlook on the crude oil prices, we of course tend to follow US crude more than Brent, but that also seems to be fading right now with the kind of move that we are seeing. So when you look at the whole of 2019, what is your sense?
Well, I think still from the entire year annual outlook point of view, I'm not very bullish. I think that maximum you are going to see this trend continuing for a quarter or so. But the fact remains is this is controlled market, artificially controlled market, and the moment the compliance becomes weak, the moment oil prices moves up, you see, this is what we've seen in the last quarter of 2018. Suddenly you see more production coming from OPEC producers and other producers. So if, for example, Brent or WTI starts trading at 55 to 58, US oil production will be 12.5 to 13 million barrels in a matter of 1 year. So this is a market where US market share is going to increase. OPEC is cutting the production, but I am having my own doubts whether this production cut can work. So I'm not very optimistic, even from the 2019 point of view, for WTI 58.60 is the best selling levels, and you are not going to see WTI sustaining above it. On the downside, 45, 44, these are the levels it is likely to hold. So this is a broader range for the entire year for WTI.
So volatility, yes, and we might see some gains as well, but sustainability really seems like a question. Preetham, hi, getting you in the conversation. What is your sense really? How do you look at the crude oil prices? What fundamentals would you want to watch out for? And what strategies for investing and hedging should the traders in India really put on?
So primarily, I mean, I have a slightly divergent view from Kunal, honestly. While the points that he made is pretty much similar to what I have. On the supply side, we've seen clearly there's a huge increase from the US, about 2 million barrels, and now they're arguably the largest producer of crude oil in the world. And the trend kind of continues. But let's factor in few things, all right? I mean, let's look at it. Highest level of production in the US or the world over has happened, right? There has been a huge slowdown in the world economy in terms of perception also, right? Now, if you look at it purely in the world economy, if you look at it, there's a understanding that the market will grow at a very small rate of 3%. And with all these negative news kind of coming in for the world markets, despite that, the crude oil has come out, kind of bounced back from its low. The reason that it's bounced back from its low is that it went into a technically oversold kind of a territory, right? Now, with the US and the China market, I mean, US and China government coming and having a discussion on the trade issues, I get a sense that the world wants a resolution in terms of economic activity. So neither does US want a recessionary trend to kind of set in, neither does China. I mean, it's pretty clear. Add to that, you have the OPEC nation and the allied nations. They too don't want to see, I mean, the crude oil prices kind of crashing. They've made it very clear that it's not only the recent production cut numbers which they've mentioned. They said that if required, we'll come across and even increase it further. So that, keeping that in mind, and the general trend that none of the governments across the world want a recessionary trend to set in, I sense that the world economic growth rate will be little more than the 3%. And if that happens, we have seen that crude oil has been kind of directly proportional to the sentiment attached to the economic growth. And if it's from neutral to positive, I sense that it could be on the higher side.
Okay,
right?
and so
our sense is...
Yeah. So Preetham, in that sense, what is your sense on the crude range for the global markets and for the Indian markets?
Yeah. So on the Brent crude side, we see anything between $60 to $70 is what our range is going to be, I think, pretty much.
Preetham, let's talk about the industrial metals as well, and pretty much the same fundamentals that you laid out would work for the industrial commodities, the raw materials as well. And while, of course, one round of meeting between US and China is done, the second round expected by end of this month, and this is going to be a senior level discussion. What are you watching out for? Is it going to be the slowdown concerns, the stimulus measures that the markets are reacting to, and what metals really are you betting on the longer side right now?
I mean, obviously, I mean, if you look at an event, forget about factoring Euro or any other part of like India or anything, what the world is looking at is what is going to be the demand from China. Primarily, that is the major driver of commodities, more so for base metal. See, Manisha, on the supply side of it, if you look at it, 2017 we saw a deficit of about 1.5% in supply numbers, which was around 2% in 2018, and 2019 is expected to be around 1.2%. Primarily driven by the drop in supply from Indonesia. So that supply is more or less stable. But as far as the demand goes, let's look at it. I again said, do you think that the US and Chinese government are looking at making a deal happen? Yes, they do. Because you need to understand, China has really bent its back to make a negotiation happen. And so has US. They've all made halfway in terms of negotiation, and I sense that the intent is very, very significant, because had it been like a short-term kind of an approach, you would have already seen an announcement from both the governments about saying what the deal structure is going to be. Clearly, they're going into the details. And that gives me a little more confidence saying that they're really working on a deal which is not only good for both the countries, but also sustainable, which is very crucial. And if that happens, we could see some of the demand bouncing back. Right. As far as data goes from China, we've seen some of the data is already coming in negative and all. So that clearly indicated the slowdown in demand for the base metal, and which has kind of been factored into the prices. But as we go forward, with some resolution happening, we sense the prices would go up, but one needs to be a little more patient. Reason being, there is a lag time from the time that the decision is made and the demand is created. So we are positive about the base metals. In addition to this, let's consider this also, that due to the whole pollution control mandate that the Chinese government have had, they've closed on a huge amount of smelting operations, and that kind of has, there's no local production supplies which is there. So clearly they're going to dependent on the international exports. And given that scenario, I sense that China will take a little more pragmatic approach to the whole trade war issue.
So bullish view on the metals going forward?
The demand would be pretty much there for.
All right. So
yes.
Kunal, what are you picking up then in the metal space? Is it going to be copper, nickel, zinc, aluminum? Because we've seen a dismal performance in the previous year. Where do you see the better fundamentals?
Yes, I think we've discussed the macro part. Going forward, I think from the first quarter onwards, you are going to see some stability in China. Remember, they've cut the RRR by 100 basis points. The trade war issue, if it gets resolved, I think most of the metals are going to rally. The main one is copper. Freeport has yesterday announced that in 2019, the production of one of the largest copper mine is going to decline by almost 0.9 million ton. So roughly 2.5% of the global production is at stake right now. And I think this is very bullish from the supply side. Like Preetham rightly pointed out, right now there are concerns for demand from China, which has been muted. But I would like to point out on that China's copper demand is still growing at about 2% growth rate. The Chinese economy has gone up from $6 trillion to almost $12.5 trillion economy. Their demand growth rate have collapsed, but still 2% demand growth rate on a $13 trillion economy is still humongous. And remember, they consume 50% of the global consumption of copper. So I think copper looks very attractive. If you buy copper on LME at around $5,800, I'm pretty confident that by the end of second quarter, you are going to see copper somewhere settling at 6,300, 6,400 on MCX also. I'm of the view that if the trade things doesn't worsen, I think the copper prices are going to rally and test levels of 440 to 445. The other metal which I'm betting on is nickel. Nickel looks very bullish fundamentally on the battery story. Remember, all these e-cars, e-batteries require a purest form of nickel, which is nickel sulfate, which is listed on LME. So nickel pig iron is not the substitute of that when it comes to car batteries. So the way China is progressing and the way this e-car revolution is moving on to other countries, I think nickel looks very promising going forward. 770, 780 on MCX, good levels to go long, and you can see levels of 870 to 880 or perhaps even 900 rupees on MCX going forward for nickel. So I'm betting pretty big on these two metals, and for the seasonal point of view, even lead looks good for the first quarter of this year. Lead prices are likely to test and hit levels of 150 rupees. But if you ask me, very bullish like we've seen in the 2017-18. I don't think so it's going to be as bullish as that. But recovery is underway in base metals, and gradually prices are going to move up going forward.
All right, and very quickly let's move on to the precious metal space as well, because that also has seen some stronger gains come in. We've definitely come off the kind of lows that we saw in gold and silver, both of these commodities. Preetham, what is your sense? How much of a further upside from here? What do you think could be the blocks for further gains, and what targets do you have for the Indian gold and silver prices?
Right. So we continue with the thing. I think the year kind of started brilliantly for gold. I remember 2018, people started with optimism where gold was just shy of the $1,400 mark, and then you know what has happened. And primarily the prices were driven down because of a stronger dollar. If we coming into 2019, we're a little more optimistic about gold prices, and the prices being positive is going to be sustained. That is more important.
Kunal, you want to add to that? What are your levels that you're looking out for gold now?
Well, I'm like I said in your previous shows, I'm conservatively expecting gold to test $1,500 on CME for the year 2019. I maintain that. Two ways, forget about the demand supply right now. If Fed is halting their rate hike and stopping their balance sheet reduction, what they have been doing, that means that there is a slowdown which US economy is encountering. In that case, dollar index is going to fall down sharply, and you are going to see gold shooting up. And another case scenario where they keep hiking the rates, then eventually economy is going to crumble. The US public debt, the US government debt, the US corporate debt, all are at all-time high level, and humongous government debt is piling on and on and on. So it becomes very difficult for the normal citizens, corporates, to service this debt. So I think in either way, gold is going to go up. So my sense is that this is the year gold is going to shine brighter. On MCX, I'm expecting gold to test conservatively 35 to 36,000. And on CME, $1,500 is my conservative. I don't want to give any. There are so many uncertainties this year when it comes to the broader financial market. I think the best refuge the investor has is gold. So stay long on gold and have a great year.
All right, we get that, Kunal. But before we go for a short break, what is your sense on the agriculture prices also, Kunal? Because we've seen quite a bit of an unrest in the country. The global commodity prices have been lower. The government is trying to, of course, continue to do, policy reforms, subsidies, farm loan waivers. There's no end in sight for all of that. But in the meanwhile, what would you pick actually as one big bullish commodity and a bearish one if you had to go about that?
I think most of the agriculture commodity prices are going to shoot up going forward. Like sugar is not listed, but I think the listed commodities, pulses in China look extremely good. This year, the weather has been erratic in most parts of the India, maybe Rajasthan, Madhya Pradesh, and other parts, Gujarat. So winter crops, I think the yields are going to get affected very badly. And in two commodities, I think is our three commodities I'd like to recommend. One is chana, which looks good. I am expecting chana prices to test 5,500 to 5,800 rupees in this financial year. Another commodity would be castor seed. I'm expecting this commodity, the lower carry forward stock will drive up prices and prices may test 6,000 rupees. And the last one, the favorite one of all the agri traders, guar seed, that is also looking very attractive on account of rising production from US. The export demand of gum is going to rise exponentially. So these three commodities looks very good for the rest of the year.
All right, we've noted down all of those yours commodity expectations and strategies. Kunal and Preetham, thank you so much for being with us and laying it out for our viewers on what to expect from the commodities sector for 2019. Champions joining us now on the show also is Kishore Narne from Motilal Oswal. Kishore, hi, thank you so much for taking time. What has been your sense in many of the commodities? Before the break, as I was talking to Kishore and Preetham, they both were of the view that the gold prices will be bullish. Of course, they had their differences on how much of a run we could see. You've been very bullish on gold. How do you see now the whole of 2019 for this one?
Good afternoon, Manisha. I think probably we've seen gold rally starting for I think last 6 months, or not even 6 months, last 4 months, and this is almost like after a 5 to 6 years of lull period in gold. So first thing what I would say that if at all the gold rally continues, maybe once that reaches that $13.20, $13.25 levels, then the people actually really start to believe that the rally is in place. Then the momentum will pick up quite significantly. The speed of the movement will be significant once it crosses the 1320, 1340, 1325 mark. So the underlying fundamentals continue to remain the same, that weaker dollar, slowing down of US economy, volatile financial assets, as well as geopolitics, as well as the trade war. So I think the underlying tone will continue to be that, and probably slowing down of the Federal Reserve rising interest rates. Maybe 2019 end, I think they should be actually stopping rate hikes, and probably they'll be turning more dovish. So if you're looking at next,
So what is your sense on the Indian gold prices? Because this is a place where you'll have to take the global prices, global cues, and the rupee into factor as well.
Yeah, I think rupee should not strengthen beyond 68.5. That's the best case scenario which I'm looking at. So given next year average should be somewhere close to around 70 to 72. That's the average which we are looking at on the rupee dollar front. So given that scenario, by year end 2019 we should be looking at 36,800 as a possible upside targets, and 2020 should be around 40,000 plus for 2020.
Okay. Kishore, also, how do you look at the crude oil prices? Because that really seems to be moving economies and other asset classes. And what a run we have seen here. Very, very volatile moves. Are you still bullish from here? Or would you say much of the news now is in the price?
See, the moment WTI touches 45, 46, you'll see that Saudi, Russia, everyone trying to perk up the prices by calling emergency meetings or whatever the kind of support which they try to give it. and again anything close to 55-60 dies down. So I think this range is going to continue in a similar manner. Probably now we are close to 51-52 on the WTI, so probably we have another $3-4 upside, so that takes to you around 200-250 rupees in Indian markets. But beyond that, I don't think the strength is going to remain. So on short-term front, probably when you're looking at in the next week or so, probably 38.50 seems to be a good targets. So we could be buying close to around 3700, 3730 kind of levels, and 38.50 is a potential upside target for the next week.
And there's plenty happening in China and between China and US also, which has been putting pressure on the metal prices. But with the talks now having begun and another senior level conversation expected by this month end, do you see tables turning? Have you turned around as a buyer in the industrial metals as well?
Temporarily, yes. See, I think there is a huge amount of pressure which caused by trade war on base metals. But as the talks go on, the market's actually trying to get a breather. So I think the current rally will extend a little bit further into the next week as well. So copper probably, I think 424, 425 is the potential zone which I'm looking at. Probably that will cross that. So anything close to 415, 416 levels is a good buying level. 424, 425 could be possible. The 10 rupee rally could be possible from there onwards. Nickel again, another metal which we are seeing. Zinc is something which we are seeing. So short term, yes, the rally is going to continue. But medium term, I have my own concerns because the demand side is not really picking up. It's only macro and the news front which is going on right now.
All right. Kishore, also, while of course we have spoken about the non-agri, it has had its impact on the agriculture space as well. You know, as we were discussing earlier also, it is an election year. We have seen protests. Nearly 11 of the 14 Kharif crops are still trading below the minimum support price. And then, of course, there are Rabi sowing concerns, irrigation water, soil moisture. The list really is endless when you look at the farm woes. How have you seen the sector, and which crops do you think, you know, there could be a major worry really going forward?
See, I think we have seen a massive reduction in acreage in China. I think that is going to be a pulse which is something which to watch for. Tur and Urad, again, though it's unlisted space I'm speaking, the pulses is going to be a good upside momentum in the next year or so. Because of course people, the farmers didn't make money, so a lot of people actually toned down on the acreage front and all those things. Cotton is again which is benefiting from the weaker rupee, so that is one commodity which looks positive from here. But I think soybean, we are still looking at a massive inventory. So edible oils is something which is I'm not really positive on. Though short term there is a little bit of momentum, but I think on a medium term, I think we still have enough competition from palm. Though weaker rupee actually makes edible oil prices, especially the imported oil prices, slightly expensive. But I think despite that, edible oil complex is not looking great. But pulses is something which I am watching out, and the cotton.
All right, that's the view coming in from Motilal Oswal as well on whole host of commodities for 2019. Kishore, thank you so much for joining us today and helping us our viewers make strategies on that space. With that, it's all the time that we have on this edition of Commodity Champions. Thank you for watching.